Welcome back. You're watching The Money Show on ET now. It's time for our Spend with TMS segment, and today we decided to discuss a latest release from Knight Frank, their Wealth Report of 2021, wherein they highlight their Prime International Residential Index. And guess what? From a global perspective, India actually is expected to record the second highest 5-year growth in ultra-high net worth individuals. That's those individuals having a net worth of more than $30 million. The billionaire count as well is expected to increase significantly. And, what's more important is the kind of impact it has on property. Globally, 26% of ultra HNIs plan to purchase a home in 2021, and 41% of Indian ultra HNIs are likely to purchase a home in a resort or a coastal area. Lots of interesting findings, especially from the point of view of affordability in India as well of property. Rajani Sinha, Chief Economist and National Director for Research with Knight Frank India, joins us now in the show. Rajani, thank you so much for giving us time. So I've just roughly put together some of the pieces, from the report, but I think who better than you to understand that, what have you learned from this survey that you have conducted? What are the key takeaways really of, how the property market in India especially would look like in the next few years?
Good evening, and thank you for having me in your show. So if I have to put the key findings of our wealth report, one interesting thing we are seeing, which you highlighted, is that in the next 5 years, India's ultra-high net worth individuals with a net worth of $30 million and above, that is expected to grow at a high rate of 63%, which is the second highest globally. So that's one big finding from this survey. And interestingly, what we saw is that in 2020, while globally the number of ultra-high net worth individuals has increased, in India it reduced by around 2% or so because of the very strict lockdown that we had in India and the sharp contraction in GDP that we saw. But the existing pool of ultra-high net worth individuals, in the attitude survey, we found that a very high chunk of them, around 70% of them, said that their wealth increased in 2020. And the ultra-high net worth individuals, basically the wealthy and super wealthy, are quite optimistic about 2021, with around 91% of them expecting that their wealth is going to increase in 2021. Now, if I come specifically to the property market, there has been quite a behavioral shift in property buying during this pandemic. Interestingly, we found in the survey that in 2020, in the pandemic year, 1 out of 10 wealthy people bought a house in 2020. And in 2021, it's expected to increase further, with 1 out of 5 talking about they intend to buy a house in 2021. So yes, looks like a good time for property market, and not just in terms of survey, even at the ground level, ground reality, if we check, a very sharp bounce back in residential market.
All right, excellent. So, I mean, largely from what you're saying and the fact that, we are going to add a whole lot many ultra HNIs, I think their income is largely going to stay resilient of sorts. And is that something that's going to lend resilience to prime property as well across the globe, more specifically in India too? Are we going to see better pricing power in prime real estate, in prime properties?
Talking about prime properties, what we saw globally is that even during pandemic, we saw prime property prices increasing in many of the countries. So in a country like Auckland, in 2020, prime property prices have risen by a sharp 17%. Then even in some of the other Asian countries like Seoul, Shenzhen, Manila, we have seen very sharp growth in prime property prices in 2020. In India, if I look at the big cities of Delhi, Mumbai and Bangalore, in terms of prime property prices, we have seen some fall in price, less than 2%. So it's much lesser than what we have seen overall, the price fall in property market. So basically the fall in prime residential price has been much lesser than overall fall in property prices that we have seen in these three big cities of India in 2020. So basically, it shows that looks like the high net worth individuals, they have been relatively less impacted by the pandemic compared to the lower income category. And that's getting reflected in the prime property prices in India.
So if we have to look at real estate as a way for, for us to be able to enjoy capital appreciation, do you see it happening more in prime versus non-prime capital appreciation?
So actually capital appreciation right now looks difficult for the time being. Yes, there has been a sharp bounce back and sales have picked up. A lot of it was, in the last few months was pent up demand. But, conditions are still quite favorable for residential market in terms of prices are low. And it's not just the pandemic year, prices had been falling before that also. Last 4 years or so, prices have fallen by 14-15%. Interest rates are at a low. So yes, demand is going to continue, but price appreciation immediately looks difficult to me in prime properties as well as generally. So probably we'll have to wait for maybe towards the end of the year, we could see some appreciation, but right away that looks difficult to me.
Okay. Yeah, of course. I mean, real estate is any which way is not a segment that, one would invest in just for the short term. You always have to look at it from a more long-term perspective. So don't expect any instantaneous returns. That, of course, goes without saying. So right away, capital appreciation is difficult, but, perhaps if you deploy a bit of patience, you should be able to see some returns. In India, and you've got a very nice table over here which mentions that how much can $1 million buy in different cities. Now, interestingly, Mumbai, of course, has been a very expensive market that goes with that goes without saying. In general, the cost of living in Mumbai is really expensive. In 2016, $1 million could buy 99 square meters. Now it can buy 106 square meters. In Delhi as well, the appreciation continues. Bengaluru as well, it continues. But I think in Mumbai, it has been a little slower compared to Delhi and Bengaluru. How do you, how are you looking at the markets within India? Do you think that in Mumbai, you will still see a slower, affordability move compared to maybe a Bangalore or a Delhi?
So, traditionally, Mumbai has been the most unaffordable market in India. But like you mentioned, what we've been seeing is that in the last few years, all over India, including Mumbai, we are seeing that the housing is getting more affordable. And it's a combination of factors happening. Income increasing, household income increasing. Like I mentioned, housing prices have been falling, not just during the pandemic, it had been falling before that. And interest rates now are at a decadal low. So all these factors have together contributed to affordability improving. And to add to that, this revival that we've seen in the last few months in the residential market, it was specifically very strong in Mumbai. In fact, in Maharashtra, Mumbai and Pune included because of the stamp duty cut that we had for a brief period of time till March, it's there. So that has also had a huge impact on demand. But going forward, if you talk about, what kind of affordability can we expect going forward, I think it's going to, remain relatively more affordable because prices, like I said, I don't see prices shooting up immediately. So prices are going to remain stable. Interest rates also, I think, will remain around these levels for some time. I don't see interest rates also going up very soon. So in that sense, in terms of affordability, it's going to be here for some time. And probably, going forward, even if, price appreciation happens, like you said, in long term, probably price appreciation will happen in the residential market. But I do not see a very strong price appreciation happening in the residential market, even after a year or so. Because if you see what has happened in the residential market in the last few years, a lot of investors are out of the market. And now it's basically end users who are there in the market. And hence, a lot of speculation which was happening there earlier I do not expect that to happen going forward, and hence a very strong appreciation in price is unlikely. But whatever appreciation will happen, it will only happen because of end user demand picking up. So in that sense, I see the affordability improving going forward.
Well, it was great speaking with you, Rajani. Thank you so much for joining us and sharing the latest highlights of the PIRI report. Would love to, catch up with you once again in the fairly near future.